Yeah, the biggest crossover, especially to brokerage, is failure. So yeah, baseball's a game of failure. You fail all the time. You fail 7 out of 10 times, you'll be in the Hall of Fame. And this is a game of failure too. You're talking to people, and some people are not receptive to your call at that time or anything you're saying. But it's really a game of being able to failure and being able to maintain your composure through the highs and the lows.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Chris Pettit is a localized apartment brokerage founder. He assists private clients with wealth growth and preservation. He also has a background in baseball, investing, and taxes. And as Chris puts it, he has all the bases covered. Chris, welcome to the show.
Hey, Sam. Thanks for having me.
Hey, man. Here. Absolutely. The pleasure's mine. There are 3 questions, Chris, I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
Yeah, well, I was playing baseball, and I joined a couple friends for some very small scale investments, some single family houses out in, let's call it the Midwest. One of my friends said, hey, I think this is a good idea. I said, well, why don't we pool some money together and we can buy a couple of these? So we did that, learned more about the real estate side of the business. My background's more on the finance side. So got to see some of the tax advantages, the depreciation, the cash flow, how it worked, good hands-on experience. Finished playing baseball and got into the brokerage business, local Southern California apartment brokerage, and really took me to where I am now. Just started this company a couple of years ago with a couple partners, and we're moving that forward. So here we are.
Man, that's really, really cool. So you're playing baseball professionally, and then you start investing in real estate. Were you guys buying single family stuff, buying multifamily? What were you guys buying?
Yeah, those were single family, and maybe a little bit of the misconception about playing professional baseball is not everybody's making millions of dollars. So I was not making a lot of money at that time, but I was saving money and put it away. So we were buying single family a little bit in Dayton, Ohio, actually, just kind of like bottom of the barrel type stuff for cash flow.
Got it. And when did you know you were onto something and you said, all right, I'm onto something, and now I'm going to scale into bigger assets? And I guess then, of course, all the way to launching a brokerage. What led you there?
Well, seeing how the cash flow would work on a single family and then saving that up, being able to purchase another one just purely based off of the cash flow that you had gotten to date, and having the depreciation, the write-offs, the expenses, that type of thing. It was like, wow, you could kind of scale this a little bit. I didn't want to try to make something huge there. And I didn't know all the tools that we have now. But once I got into the brokerage business, I realized, well, this actually is scalable. Seeing like a lot of things that my clients have done and how they've grown their portfolios. A lot of people just started from the ground up, and individuals have large portfolios.
Yeah, absolutely. What took you to the brokerage route versus the investment route? Or maybe there's both.
It's both for me. I do believe in investing, and the brokerage route is an avenue that you can get there. Obviously, you got to make some money to be able to invest it. So right. I think that's probably what led me to the brokerage route over other jobs. What took me to the brokerage route was the ability to be entrepreneurial, grow your own business, do your own thing. And it's really, you eat what you kill. So whatever you're out there putting in, you're going to make those returns.
Right. Yeah.
So I saw the upside in brokerage compared to just like a job.
Absolutely. And as things get extremely frothy in a few different asset classes, I've oftentimes looked at it and I'm like, gosh, it's kind of a risk-free way and obviously you got your time, your capital, your investment on the front end of going out and finding opportunities and building your buyers list and all those things. But in its own right, you're not putting down millions of dollars into these deals and going, gosh, I hope it works out. It's like, okay, once we get it across the finish line, it's kind of a risk-free way of being involved in real estate. So I really kind of like that, especially in times of uncertainty. So that's really cool. Now you guys are specializing in the Southern California market. Is that right?
Yeah, specifically Southern California, and specifically apartment buildings. So it ranges the gamut from, 4 units, which obviously is somewhat residential, but 4 to 50 to 100. There's a lot of smaller buildings in Southern California versus maybe some other areas. So there's a lot of 10 to 30 unit buildings out here.
From what I understand, there's not a lot of new supply coming online in your guys' market.
No, not at all. So the market we work, like I said, is, let's call it 4 to 50 core market. And nobody's building those. Maybe there's a couple of people building duplexes or fourplexes based on some new zoning, but the stuff that's getting built is 200 unit, 300 unit, 400 unit, Class A, right in the core business districts on these main drags. And those are just not competitors for the type of product that we are seeing our investors focus on.
Right. So tell me about the opportunity right now in your market.
So a little bit of the difference in our market versus other markets is such a core market, specifically Orange County, LA County, San Diego County being core markets. You can't, like you said, no more supply. And someone who wants to preserve capital, yeah, you might look at the cap rates. They're very compressed, but they're staying compressed. They're not changing, and rents are flying. Oh, some of that to do with the back end of rent control, but rents are really flying up. So there's no supply, there's no rental supply. And then the Class A stuff that's coming out is being priced to the moon on the rental side. So any nice property that's a little bit lower density living for a tenant, they're going to want to come in and happy to pay a good amount of rent there just to live in the location that they want to live in. And I don't see that changing just due to the supply, like demand and supply. So the opportunity is purely more preservation rather than say, you might be like, oh, let me go out. I can see this quick flip over here in this hot market. I wouldn't call us like a hot type market or cold market, obviously.
What's a strategy then for a buyer? I mean, they're buying something 4 to 50 units, Southern California. It might be a rent control. I don't know exactly how rent control work. If that's by county, if that's by building, if that's, maybe you can even give us some enlighten us on that. But what is the buyer? What is the person you're representing? What are they thinking when they buy a building? What's their strategy for how to increase value?
Yeah, I think so. Their strategy is going to be growth and appreciation, and you're going to get there just through the natural and pushed rent growth. The overriding, it's a state rent control policy, max of 10%. It's not terrible. Obviously, sometimes if people are behind, then because an owner's owned the building a long time, there is a lot more upside there. Yeah, the strategy is just to come in, purchase the building, get the rents up to market, improve the property a little bit. And not that it's going to be a significant, like I said, flip, but you're going to have the value. You're going to have the value earned in the property and the significant rents providing more cash flow. And you're also able to get pretty much core debt.
What's it like when you buy a building? And again, I'm asking just as it pertains to more the regulatory side of things there in California, which is a lot of what investors are afraid of, I think.
Mm-hmm.
Oh man, and we hear it. I think it gets a bad rap because obviously you're there and you have clients there making money. You're there making money. I've got friends out there making money in the apartment space in Southern California, and I hear it all the time. We don't invest in California. But what does, which I think is kind of, again, it's kind of it's probably a bad statement because obviously there's opportunity there. But what's somebody doing when they buy a building from a regulatory and from like a rehab standpoint? Like what can they expect? What are the challenges there? Do those challenges present opportunity? Talk to me about that a little bit.
Yeah, I completely understand the regulatory side. And a lot of our clients and owners have some of the same feelings. Like they're not saying I won't invest here, but because they already own here. But they're saying, oh, I'm not sure about how this regulatory environment is going to be for landlords, which is a fair thought. So part of our deal, our job is educating them on what the latest government requirements are going to be that are coming down the pipeline. I mean, we don't really have a say in those things. So it's just keeping them up to date. And how do you navigate that? The biggest thing you can do is stay on top of your rents and increase them when you can once a year, and not fall behind. If you're buying a building today, it's not crazy. I mean, we don't really market to, say, out of state buyers. Like California our buyer pool is the buyers that own in the market, that live here. And that's the people that, like, they wouldn't say, oh, they already own here and they live here. So right. California is going to get you for taxes either way, whether, if you're going to do both. So if you're going to live here and you want to own here, maybe you want to drive by your building, maybe that makes sense. But just in order to get there, there's no like crazy regulatory requirements when you purchase an investment property. You go buy an apartment building, a 10 unit down the street, nothing crazy. But if you do want to do some rehabs or or raise rents, you just need to be within the guidelines. And they're really not, outside of a couple areas. City of LA is very restrictive. Santa Monica has restricted rent control, Santa Ana. And there's certain cities do have above and beyond requirements. And those are the cities that people are either navigating away from. But like you said, there's still a lot of people that, maybe not a lot, there's people that will make money in those areas, and they're more experts in navigating that local environment.
What do you say to somebody that maybe is a brand new investor to your market? Where do you start them?
I would start them with the sense of you need to be comfortable with the cap rates. Let's call it, 3.5 to 4.5. 4.5 is probably generous, but you have to be comfortable knowing that this is capital preservation. And if you're buying here, you're going to start at a 3.5, and push that up quickly to, a 4.5 on your numbers. And it's not something that you're going to be making this huge pop on right away, but you are going to make those gains. And rents are going to go, say they go 10% this year, 10% next year, they're a little bit behind. Then you will catch up and you'll have the value, and it's going to be safe. It's a safety play, really. But we don't work with too many new investors. I mean, I live here, I invest here. I don't have an issue with that. For me, I'd rather own good real estate and good locations. And it's not about today's cash flow for me.
Yeah, that's a good point. And that's a lot of what people are looking for, is that big pop. So I guess just reframing the investor expectation, like, hey, you're coming into this market, this is a safety play, I think, as you put it. You're not here to hit your home run. You're here to preserve capital. What is, if a landlord is behind, let's say it's a legacy owner, they haven't raised rents in 7, 8, 10 years, what is the tenant resiliency as it pertains to rent increases? Like, do we see a lot of buildings go vacant once people are like, hey, we're raising rents 10% this year. You were at $2,000, now you're at $2,200, and next year you're going to be at $4,420. What's that? How does that work out?
Yeah, not really. I mean, a legacy owner who's fallen behind or just chosen to do that because they don't need the extra cash flow, right? New owner comes in, goes 10%. People don't budge. It's not enough because the building on the street's renting for $500 more than that. So it's not some people will move and you get natural movement. It's not too restrictive. And then you may be able to move people out for some renovations, but that's a little bit dependent on the location.
Right. That's really, really cool. Tell me about finding sellers. I mean, that's obviously the two things we need in this real estate, or deals and money. How are you guys finding sellers?
Yeah, on the business side, I mean, we just do a lot of consistent calling and emails and touching base with people. It's a very consistent group of people that we're talking to, the owners that are local, just trying to build that relationship. And there's not a lot of, let's say, people that are just oblivious to what's going on. A lot of people know what's going on relatively, and we just want to talk to them and see, hey, are you ready to go? Are you ready to sell today? Or what's your impetus to sell? These are mostly long-term holds for people, long-term legacy ownership. And as we know, those are great deals to buy and the most opportunity for upside. And so sometimes it's like building family relationships whenever that time comes to pass it down along the family, things like that. I mean, the time comes for everybody, but this is not a short-term game as far as location goes. You got to put in the time to build the relationships here.
Yeah, and that's true. That's true. I think in any market, there's not a nuance there necessarily to finding sellers. It sounds like you guys are grinding it out just like everybody else when it comes to deal flow. So.
Yeah, absolutely. I mean, we have some younger guys, and it's we don't pull any punches there. It's like, no, this is a grind. I mean, when you start in the business, it's a grind. I mean, we're still on the grind, and that's really the only way you're not gonna miss blatant deals.
Right. Tell me about your team, building out your team. You said you have some younger guys on the team now. What's it been like building a brokerage? And, talk to us about that experience and some of the lessons maybe you've learned in that.
Yeah. So it was just an opportunity that presented itself for myself and two partners. And we were working together before, not necessarily doing deals together, but independently doing deals while working together. And so we thought, hey, this is a great opportunity for us to build ourselves. Where are we going to be in 5 or 10 years? And, maybe build out some sort of a brokerage. We're not trying to be this big brokerage house, but having some more people talking and being able to collaborate on deals. I hear you say something, oh, Sam, what was that deal you were talking about, Sam? Like, maybe I might have somebody for that, where you're just thinking, I talked to this person, that was like a waste of time. Right. They said something, but it didn't click for you. But I'm sitting over here like, oh, well, it clicked for me, and let's put a deal together. And so we're really trying to build that team environment where obviously you're going to get rewarded on something you bring in. And we have two other guys that are just starting out in the business. They believe in owning real estate as well, and that's a long-term goal. I mean, if we can all switch from the broker side to the owner side, we're gonna be doing pretty well,
Right. Is that the long-term plan then? Is to
to accumulate and own real estate. I think California, maybe getting back to one of your earlier questions, Southern California is more of an accumulation game. If you can accumulate little bits and pieces of deals, I mean, I know I have some clients that are open to me throwing into deals. And if I can at the time, I'll do that and just kind of put it away. It's not, it's not there. It's not accessible. I'm not running the deal, but hey, it's in the deal. I know that's a good piece of real estate, and down the road, I'll be rewarded. So I think it's more of an accumulation play, but yeah, that's the goal ultimately, just to own more real estate. I mean, we're believers in real estate, and we also feel, I'm a strong believer in the fact if you're brokering and you're not owning, like, do you really believe in your product?
Right.
And maybe you don't. Maybe you're just a sales guy. That's fine too. But
absolutely. Tell me about, because that's a nuance kind of play that you talked about there when you said, how your buyers will rope you in on the deal and say, "Hey, Chris, do you want to participate?" What's that conversation like, and what would you recommend to somebody that wants to approach their broker? Maybe it's a large commercial real estate transaction. The broker's getting a multi-six-figure paycheck, and they go, "Hey, do you want to get in on this deal?" How should someone approach you as the broker to have that conversation?
Yeah, I mean, I think it's very easy approach from the investor. It's an easy question. Hey, would you have any interest in partnering in? Or putting some of your commission in the deal? Obviously, very clear that no, you're not giving it up. You're not giving up your commission, but in putting it into the deal. And timing's everything in that respect. Like I said, this is my job. So depending on where I'm at, timing, maybe I just put money into another deal. Obviously, got to pay the bills. And so yeah, I feel like it's an easy conversation from the investor. From the agent side, I don't really bring it up that much, just because I feel it's a little more, most people I deal with, it's their deal. It's like a one person buyer, right? And maybe, but people that I know well, I'll throw it out there at some point, like, "Oh, I'd be happy to co-invest with you at some point." And so there's a few. That's the way I would frame it. As a broker, you don't want to be telling everybody, "Hey, oh, let me get in with you. Let me get in with you." But it's a little more, I guess, I feel like that would be like pushy. But from the investor side, I think if you just ask with no expectations, I don't find the broker being offended.
No, certainly not. Certainly not. I think it's a great way, one, to get some buy-in from, like you said, either you believe in the product or you don't. So get some buy-in from the broker. It's a relatively easy, not easy, but it's a source of capital, where you can get involved in it. But then I think it also just develops a long-term relationship with your broker, where it's, hey, you know what, we're not just doing a one-time transaction. We're in deals together for the long haul. So that's really, really cool.
Yeah, I mean, I think it's beneficial for both parties. Like you said, you put people in, we can be partners, and you sold me the deal, and then we'll sell it back whenever the time comes again, and we'll make money and go to the next thing.
Absolutely. Tell me about baseball and real estate, that transition. What would you say some things, or maybe I'll ask this question. I could find the question I was going to ask you. As it pertained to baseball, what are some things, some crossovers from playing baseball to real estate, some similarities you find in between the two?
Yeah, the biggest crossover, especially to brokerage, is failure. So yeah, baseball is a game of failure. You fail all the time. You fail 7 out of 10 times, you'll be in the Hall of Fame. And this is a game of failure too. You're talking to people, and some people are not receptive to your call at that time or anything you're saying. But it's really a game of being able to failure and being able to maintain your composure through the highs and the lows. This is a game of highs and lows, and that's the same as baseball. So you can't be out there closing a deal and celebrating like you just won the World Series. It's not gonna pan out. You got to be back on the grind and work harder.
That's it, man. That's it. Baseball is a game of failure. Yeah, that's kind of funny. I've never heard it quite put like that, but you're right. What'd you say? What was your statement there? I didn't quite catch that, but it was something about a Hall of Famer. If you do what now? If
you fail 7 out of 10 times as a hitter, you're a Hall of Famer.
Right. Yeah. If you have a 300 batting average, you're a Hall of Famer, which is that's pretty crazy. I absolutely love it. Chris, if our listeners want to get in touch with you and learn more about you and what's going on there in your marketplace, what is the best way to do that?
Yeah, you can reach me via email or through our website. It's Skyline Commercial Advisors. And I'm also on Twitter. It's cpettit815. That's more of a generic following. I do talk some real estate. It's not strictly real estate focused. It's pretty personalized and open. But yeah, those two places, and email, or my email's on the site. You give me anytime.
Awesome. Chris, thank you for taking the time to come on the show today. Certainly appreciate it.
Yeah, thanks, Sam. Nice to meet you, and a pleasure being on the show.